What's up everybody? Welcome to the Stocks channel. Today we saw the stock market go up across the board. Are we going to continue to climb higher, or is it time for a pullback before we start seeing some higher prices? First up, we'll look at the S&P 500 Spy Etf. So let's crack open this chart and see what's going on in the stock market today. Alright, so we did see the S&P 500 go up over 1% today, but we did get a lot of pullback by the end of the day because we were trading much higher intraday. Now don't forget, we did gap up, so there is a gap that won't close until we get a price target on SPY of 363. That is just right above the 5 EMA, but we know the 5 EMA is going to continue to head higher. So we could still find support at the 5 EMA if we do start getting a pullback, but it is likely that we're going to start closing these gaps when we start creating them at higher and higher new all-time high prices. There is what's called price discovery in the market, and when we create gaps at new all-time highs, we create price action that's never existed before, and the market loves to use those as areas to retrace into. So it is very possible we're going to close this gap quickly, and if this gap does remain open, it could be a good price target when we finally do hit a top and we start heading back down for a correction. So this gap is pretty significant, and it's going to tell us a lot of information the longer it stays open. Remember, gaps can act as support, so we could still find support at the top of the gap right around the price target of 365. Now looking at the price action, we're still closing above the 5 EMA, and that bullish trend is still fully intact, and we could see it's only growing with that momentum because that 20 simple moving average is getting more and more positive sloping each and every day. Our price target on SPY remains up here at $377, and our support levels are the gap at 363, and of course our support level that we've had in the past right around 362. So those levels should be strong support, and if we start breaking and closing below the 5 EMA, we still have the 13 EMA and the previous gap that won't close until a price target of 358. This market has a lot of bullish price action and a lot of bullish trending, so don't look at that 358 gap like it has to get filled anytime soon. The market's going to likely keep heading higher towards our price target way before that 358 gap fills. Remember, these trend lines were broken as resistance, and they could now be support, which also aligns with a support level right around SPY levels of 358 to 359. On the Nasdaq 100 QQQ ETF, we also opened a gap today, and we did exceed our first price target one of $300. The gap will close at a price target of exactly $300, and that gap is a gap that could also get closed very quickly. We're trading at the top of the Bollinger Band, and you could see intraday we were trading above the Bollinger Band and we retraced back inside. So this could be a buy the dip scenario because that 5 EMA is coming up into that gap at 300 right around the same time that we create a gap that could act as support at the same level. So you can see the price action still very bullish, closing way above the 5 EMA, and the bullish trend is still fully intact and only growing in momentum. So the Nasdaq 100 looks like it is going to lead the way for the next bull rally, and we did get that brand new all-time high on the Nasdaq 100 closing price today. So if I zoom out here, you can see that our last closing all-time high was 302, and today we closed right around 303. So we are getting new all-time highs, and that is going to be very bullish for the stock market to see all of these indices climbing and forming new all-time highs together. So next up, let's take a look at the Dow Jones Industrial DIA ETF, and we can see we almost closed this gap today, which won't close until we get down to about 297.7. So that gap looks like it could close very quickly with just the slightest pullback, which we could see these gaps close as early as tomorrow. So remember, last time we closed the gap, it was an intraday close and we started bouncing. So just because we need to close the gap doesn't mean we're going to start tanking and the stock market's going to crash. These gaps could close, fill that price action, and then we'll have price discovery, and then the stock market can continue to climb higher. So watch these gaps as possible support levels, and watch the 5 EMA as well. On the Dow Jones, we haven't formed that new all-time high yet, but as soon as we get a closing price on the Dow Jones over $300, all three indices are going to start running with new all-time highs, and when all three indices are forming new all-time highs, that's a bull market across the board, and the stock market is likely going to continue running. So I'm still labeling this market as a buy the dip market, which means in a bull market, we want to buy off of the support levels and we want to let it ride and get our profits from the bullish momentum and the bullish price action that we're seeing. Next up is the VIX, which is our fear indicator. And we see the VIX really not going anywhere today. Even though it did close up a little bit higher, it's still below that support level at 21.3. So we're still seeing low fear in this market, and fear is slowly bleeding out, and the VIX is likely heading towards that 18 level. So with low VIX, we have low fear, and we're likely to see the stock market just continue grinding higher, chipping away higher and higher each day. It is a buy the dip market, so when we finally get those pullbacks, it's a great time to start accumulating and adding into your long positions. And as the market starts running, start trimming some of those positions and locking in those profits. On the US dollar, we see it getting flushed today, closing below the lower Bollinger Band and closing down negative 0.6%. Remember, I always say a weak dollar is a strong stock market, and we're seeing the dollar continue to weaken, and we're seeing the stock market continue to grow stronger. So it is likely the dollar is heading down for another leg lower, and we will see if the dollar is going to find a bottom this time, or if we're going to head lower, consolidate, form that bear flag, and continue to head lower. With a weak dollar, we're likely to get strong gold, and gold finally woke up today and remembered that its job is to go up when the dollar goes down, and gold had a great day today, closing above our resistance level at 1809, which could now act as support level. So let's go ahead and change that resistance level over to green, and we'll see if gold can hold up above 1809. If gold holds up above 1809, it's likely heading back up to our previous resistance level at 1860. Last night I did mention that gold looked like it was capitulating, and we started getting a parabolic move to the downside, which means we're likely going into a bull market. Once everybody doesn't want to be in a stock and they sell, that's the best time for a reversal, and gold is coming out of a long bear market, which we can see it's been declining for a couple of months now, and it's likely gold is now bottomed out and we're going to start on that bull run. So watch for gold to start heading towards 1860, and once it gets there, we're going to see if that level is going to act as resistance or if we're going to blow right through it. On silver, we see a very similar story, closing up above our support level last night and having a monster day today, closing all the way up at $24. So silver also found support at the same time gold did, and our price target on silver is $25. And again, we're going to see if that level acts as resistance or if we blow right through it and start heading higher. In the financial sector, we got another bullish price action close above the 5 EMA, and you can still see we have that very strong bullish trend in the financial sector. On industrials, we're closing just below the 5 EMA for 2 days in a row now, but we still have a really strong bullish trend that can start pushing prices higher any day now. On the healthcare sector, we had another bullish day, closing up above all of the moving averages on the price action, and we can see that that bull trend is starting to gain momentum and that 5 EMA is starting to cross to the bull side. So to pull this all together and summarize, we see a low VIX, low fear environment with bullish sectors across the board, and we see the tech sector starting to take the lead on this next bull rally, forming new all-time highs. The S&P 500 is likely going to continue heading higher until we see something shift in the market. Right now, all of the sectors are bullish. We see the dollar continuing to weaken, and we see fear bleeding out of the market. So it is likely we could close these gaps, but we're still bullish, and this is a buy the dip market, and that's what I'm labeling it as. Buying the dip means every time we get an opportunity to buy lower, we want to take advantage of that situation, buy lower, and let it climb up higher, and then start locking in our profits. Rinse and repeat, and just keep doing that over and over. As long as this market's bullish, it's a buy the dip market, and take your profits as we climb. But you know we're not stopping here. Next up is an episode of Hot Stocks. I already know what you're all wondering, and you're saying, what is Tesla doing and what is NIO doing? Well, if you have not seen the first episode of Hot Stocks, you need to go watch that, because I go in great detail how I got my Tesla and NIO charts, and you really need to understand what's going on in the wave structure to understand my analysis. So first up, Tesla, we knew the 587 level was going to give us trouble, and I talked about why in the first episode of Hot Stocks. So we see 2 days in a row struggling to break through this level, which only proves my confidence that I got this level right, because we're seeing so much resistance at 587. Remember, we have to break and close above 587 before we're going to start looking at our next price target at 647. And again, we're just rounding that up to 650. So if Tesla closes above 587, it is possible that we are going to see 650. But if we don't close above 587, it's possible that Tesla is just going to start going into that bear market we were predicting. But we do have the S&P 500 inclusion news coming up on 12/21, and it does look like the index funds are just going to buy Tesla all at once. So who knows what's going to happen on Tesla between now and then? Is it going to dip and then jump, or is it going to keep climbing and then have a huge dip? Let's not try to guess. Let's just follow the price action, follow the technicals, follow the trends, and see where Tesla's going. So right now, watch that 587 level, and it's a matter of closing above or staying below that level. That's going to allow us to know what's going to happen next to the Tesla price action. Next up is NIO, and jumping over to the 1 hour chart, it was forming this consolidation wedge, and unfortunately for the NIO bulls, we did break out to the bottom. So that means the NIO bears finally won, and they're going to start eating on this stock, and they're going to start shorting it into the dirt. So keep in mind on NIO, it does look like we are going to that wave 4 that I predicted. And remember, you have to watch episode 1 of Hot Stocks to see why I'm even talking about waves. So wave 4 looks like it's fully in effect. So you want to watch these support levels at $46, which we already closed below. So I'm already looking below to our next price targets at $41 and $39. So be patient on NIO. This is absolutely a falling knife situation. and you don't want to try to jump in front of a moving bus because you're just going to get ran over. Wait for this thing to bottom, wait for wave 4 to end, and then we can start getting bullish on our way to wave 5, which again, I will have a price target on wave 5, but it's somewhere around $70 right now unless we dip farther than I expected on wave 4. So don't catch the falling knife, be patient, and tune in every night to Hot Stocks to see where NIO is likely going to bounce from. Next up is Palantir, or is it Palantir? I don't know, this stock is taking a dump, but we are trading right on the 5 EMA, and we keep coming back down to that critical $24 level that I was talking about. So watch the 5 EMA, which is right around 25.6 right now, and if we close below that, we're going to continue testing this $24 level. Just because we're testing the $24 level doesn't mean we can't go lower. If we break below support, our next price target on Palantir is $21. So let this thing consolidate, let it build up some support, and then start considering buying in. You don't want to buy a FOMO stock that just went parabolic just because it pulled back for 3 days. This stock has a lot more room where it can continue to drop, and there was a lot of dumb money and a lot of parabolic movement going on, which means it could be a longer consolidation and a longer correction before we start heading higher on Palantir. On AMD, we broke above 92 and we did stay above that level today. Remember, on AMD, it looks like it broke out of a long-term consolidation to the bull side and it's gonna start running. So my price target on AMD remains at $100 as long as we can stay above these support levels and keep this bullish momentum and this bullish price action going on. So AMD is still absolutely a hot stock and it's staying on hot stocks until proven otherwise. Next up is Draftkings, and I love Draftkings. It broke out of a nice consolidation correction period and it's starting to run, holding up above that 5 EMA. You could see today that the 20 simple moving average is crossing that 50 and it's sitting right on a support level of $50 right on that 5 EMA, and it's getting ready to bounce in a big way. So Draftkings looks like a runner, and if we start seeing it bounce, we could see some strengthening to this bullish trend, and we could even blow right through my $54 price target and start heading up to $60. So Draftkings is looking good and it's looking like it's ready to run. Next up is Twilio Stock, and we did get a nice dip on Twilio Stock. We are still holding up above the 5 EMA and it looks like we could be bouncing soon. We still have that bullish price action above the 5 EMA and we still have that strong bullish trend developing. So our price target on Twilio remains at $373. But before we get there, we will have a resistance level at $338 that we're gonna have to blast through. So Twilio stock's looking good, and I'm looking for Twilio to start heading higher soon. Next up is Nvidia stock, and we did see Nvidia bounce off support, and it looks like it started wanting to run, but we did get a daily price action close below the 20 simple moving average. It's not too late for Nvidia to start running, but it does need to continue to close above that 20 simple moving average, and we need to start seeing a bullish trend develop. So Nvidia looks like it could be in the early stages of becoming a hot stock, because if it can break out of this consolidation and this weakness of price action, it could start running all the way up to $570. If we break 570, my price target on Nvidia remains up here at $620. Next up is Boeing stock, and Boeing has been consolidating and been correcting and pulling back a little bit, but it's still closing above its 5 EMA, and we still have this really strong bullish trend. And you can see now that the 20 simple moving average is really positively sloping to the upside, and it looks like Boeing is getting ready for another run. So the resistance levels on Boeing are at $222 and $230, which happens to be our price target for Boeing. If we break through $230 on Boeing, it's likely that we're heading straight to $260. So that'll do it for tonight. Please let me know how you like the format with the hot stocks after the S&P 500 and stock market technical analysis. It's a lot easier for me to do these all in one video, so let me know in the comments below if you like the way I did it tonight. Thanks for watching, everybody. As always, I will see you in the next episode.